Hello and welcome to the look ahead for Tuesday, the 20th of May with me, Fiona Cincotta, Senior Market Analyst at Citi Index. So overnight, we're going to be watching out for a rate decision from the People's Bank of China, also from the RBA. In the European session, we've got PPI inflation as well as Eurozone consumer confidence. And then in the US session, we'll be watching out for Canadian CPI inflation. So just starting off with Eurozone, what's going on with the euro, because obviously we've seen a bit of a move today, and that has a lot to do with the movement in the US dollar. This is the euro-US dollar that we're looking at. We can see there that jump higher, up around 0.85% on the day on the back of US dollar weakness after Moody's downgraded the credit rating for the US, or notched it down by one tick to AA1, down from AAA, marking is the third rating agency and the final large rating agency to downgrade US credit rating, and that is on concerns over $36 trillion in debt. Now, as a result, we've seen the US dollar weaken, we've seen the euro strengthen, but I think in order to see any follow through on that rise, we're going to need to see a slightly hotter PPI data or encouraging consumer confidence data. Now, PPI inflation, that's inflation that's measured at the factory gate level, often considered a sort of lead indicator for CPI inflation, is expected to fall 0.3% month on month, which is down from 0.7% fall. On an annual basis, expected to fall 0.6% after falling 0.2% in the previous month. So that does point to, I would say, still weak falling CPI, which does suggest that we could see consumer prices continue to come under pressure. Interestingly enough, ECB members have also said that they expect any trade tariff implications to be deflationary, so to be deflationary. So that could have an impact again on inflation. We had inflation data today from the Eurozone, confirmed at 2.2% in April. So very much on track for another rate cut from the ECB in June. We need to get really hotter than expected PPI to start sort of gaining some traction in the euro with helping to sort of ease dovish ECB bets, because at the moment any gains in the euro are limited in light of expectations that the ECB will be cutting rates by 25 basis points again in the June meeting. Just as far as levels to be watching, there's no US data. We do have Fed speakers tomorrow, so that's just something to be watching out for as well. 112.75, that's sort of today's high. Actually, it's also the lows that we saw a couple of times in April. If we can get above that, and then also the 1350 level, which is the rising lower band of the rising channel, that could bring 114 back into focus. On the downside, we can see that it's being guided up by the 50 SMA, so that would make a sensible level of support there around the 111.20, 111 level. Below that, you've got the 112. Just going to tick on over now to the Australian dollar. As I said, RBA rate decision. RBA is expected to cut rates, pretty much fully priced in. Pricing in, I think it's 98% probability of a 25 basis point rate cut. And this comes, I mean, if we just have a look at the Aussie dollar, US dollar, very much seeing the a continuation pattern, sort of a holding pattern there, capped on the upside by 65, capped on the lower side probably by around there 63.30, something like that, or potentially even a little bit higher around the 63.64 level. So we're below the 200 SMA. Obviously, as I said, we are expecting a rate cut. There'll be very much a focus on the commentary surrounding the rate cut. Obviously, there has been a truce between the US and China as far as trade is concerned, which is offering some support to the Aussie dollar. Also, we've got that weaker US dollar on the back of the rating agency cut. But buyers are going to need to get over that 145.50, 200 SMA and 0.6450, the 200 SMA, and 0.65, that high that we saw for 2025, in fact, in April. If we can, or sorry, May it was actually. So if we can get over that, that's what's needed to create a higher high and extend gains upwards towards 0.66. On the downside, as far as support is concerned, I said 0.64 immediately, and then we've got the 50 SMA, which is around here, which is 0.6330. That's if we see the RBA starting to act a little bit more cautious about what potential impact the trade war could have on the Australian economy. Data from China today showed that there had been a slowing in industrial production and some concerns as far as retail sales were concerned as well. So just finally, let's just have a look at US dollar CAD. Now, this is US dollar CAD. This is the, we've got inflation data. Sorry, I'm just going to leave that one there, actually. Inflation data out tomorrow. Inflation is expected to rise 0.2% after rising 0.1% previously. I think the thing is here with inflation is obviously we're going to be looking for any sense of inflationary impact in light of the trade tariffs and what that might mean. Also, obviously there could be potential for slowing growth as well. So we could see inflation cool by more than expected. And I think if that is the case, if that is a concern, then we could be watching out on the downside for the 139 level. That could offer immediate support. We've seen the gains here have been capped by the 200 SMA. It is a little bit neutral, the positioning, but I mean, if we have a look, RSI is also just about neutral, but if we can get a break below this 139 level, that obviously opens the door to the 137.70 level. Breakdown there is needed to create a lower low. Obviously, we've got the US dollar weakness today, but the US dollar has seen a couple of weeks of gains in light of the improving sort of trade outlook as far as its trade relations are concerned. So, any news obviously surrounding upbeat trade recovery or trade deals could give the US dollar some strength. Buyers would need on the upside to get above this level here, the 140.25, which is the 140, sorry, which is the 200 SMA, to really gain any traction back up towards the 141 sort of 75 level. In order to really gain momentum and pull up back towards levels that were seen earlier in the year. So I hope that you've liked what we've seen. And if you do, then please do give this video a like, and we'll see you tomorrow for more videos like this.